But also, just on our market, it is one very big story. The Chief Executive Officer of First Bank of Nigeria, Dr. Adeduntan, says the Tier 1 lender plans to meet the Central Bank of Nigeria's new 5-year plan of recapitalization of 4 Nigeria commercial banks. In an exclusive interview with Channel's business correspondent, BC Adebayo, Dr. Adeduntan comments the regulator's initiative and unveils some of the bank's plans and expectations for the year 2020 and beyond. Take a listen.
How positioned is First Bank for another round of recapitalization?
Thank you. That's a very good question. As you are probably aware, our bank is 126 years old this year. So the implication of being around for that long is that we have witnessed several cycles in the industry. And the reason why the brand and the bank itself has remained strong and relevant is our ability to continuously to invent and reinvent ourselves. Speaking specifically to recapitalization, the focus of the governor of the central bank and the ambition is very clear. The governor would like to see a stronger financial sector, which is why he's pushing this recapitalization agenda. If I take you back to 2004, 2005, which was when the Professor Chukwuma Soludo led CBN, first of all embarked on the massive increase in capital, the banks that emerged from that process were bigger, they were stronger, and that was actually what ushered in the era of Nigerian banks being able to take part in what I call mega deals. So for me, I see this recapitalization initiative of the governor of the central bank as being very positive, not just for the financial sector itself, for the entire economy. And for us specifically as First Bank, like I've highlighted, the reason why we have existed for 126 years and we have remained a dominant player in that sector is that continuously we have the ability to invent and reinvent ourselves. And in this particular instance, depending on where the central bank wants the strategic, systemically important banks to be in from a capital perspective, we are fully ready.
Tell us, what are your expectations from the banking sector in the year 2020?
Again, this decade for me, it's if I just take off from where we stopped, my previous response, I expect a high level of competition within the sector. I expect that Nigerian banks will continue to pursue various African regional expansion program. The African agenda becomes even much more important strategically in the aftermath of the Nigerian government and the president specifically signing the African Continental Free Trade Agreement, which basically ushers in it opens a new vista as far as trade and business in general is concerned across the length and breadth of Africa. The licensing of the payment settlement banks and the advent of fintech, for me, everything is pointing towards a higher level of competition. When we also recapitalize in line with what the governor of the central bank has spoken about, I expect that the sector will be stronger. We're going to even have, today we have very strong players. We're even going to even have much more stronger players. In this decade, I will also expect some degree of consolidation because scale is very important. So I'm aware and I will expect that a number of banks will try to also acquire the kind of scale that we and a couple of other banks currently do have. And as we are open to pursue our African regional strategy, I will also expect banks from outside of Nigeria now to also be interested in Nigeria, because Nigeria remains the largest economy in this within the continent of Africa, and it's of importance, strategic importance to other banks who are currently not represented within the country. So it's a decade that we're looking forward to with hope, with a lot of expectations. We expect that the industry will continue to grow in bands and leads.
So another interesting topic is that of the bank charges. Of course, the central bank just released new guidelines last month in December 2019, and of course, those guidelines have taken effect from the beginning of this year, talking about January the 1st, 2020. How will these new charges affect the earnings of banks, particularly First Bank?
With the new guideline that's been released by central bank, it basically reduced revenues for all the banks. But for me, that is the downside. But I also see the upside because, again, that would compel banks to get more efficient. It also compel banks to go for growth and to acquire more customers. Because, again, if you've made X billion of naira by servicing Y number of customers, and the rate has dropped by as much as 50%, one of the options open to you is to try to grow the number of customers that you have. So it's good from a financial inclusion perspective, but it's because that's basically bringing financial services, making it cheaper for our people to enter into financial transactions. In the short term, it's possibly bad for the banks, but I think in the medium term, we'll be fine.
Since you assumed the mantle of leadership in 2016, we've noticed a reduction in the bank's non-performing loans. How have you been able to achieve that?
Okay, in 2016, when I assumed the leadership of First Bank, one of my key commitments to the market, I said to the market, we are going to revamp the entire credit risk architecture of our bank. I committed to the market that the entire risk management architecture of First Bank was going to be revamped. I also committed to the market that we're going to pursue recovery on those assets that were challenged. And indeed, last year, in 2019, I committed that the non-performing ratio would drop to sub 10%. I'm happy to say here today that this non-performing loan ratio is now below 10%. But more importantly, I'm happy to say that the strengthening and the revamping of the risk architecture has now been fully embedded, is working very well. And I take joy and pride looking back at what we've done to strengthen that entire architecture, looking at people, looking at the processes, looking at the technology that underpins what we do, looking at even the entire credit culture of the institution. And what we are seeing today, the significant reduction in NPL ratio, the next to very low level of NPL, what we call vintage NPL, is a result of those, the last 4 years of very hard work, not just by myself, but by the entire workforce of First Bank.
One of the major issues in the country is talking about financial inclusion. Now, of course, that level is still quite low. What is First Bank doing in terms of contributing to increase the level of financial inclusion in the country?
If there's an area where we've excelled, I would say categorically is in the area of working with the government and the central bank to pursue the financial inclusion agenda. Today, our bank, First Bank, we have over 45,000 First Bank agents creating First Money spread throughout the nooks and crannies of Nigeria. There's no other bank or other financial institution that comes close to that number today. As at the last time when I look at the statistics, we account for more than 65% of the volume of transaction among the agent banks in Nigeria. So it's an area that we take a lot of pride, and that itself is derived from who we are as an institution. First Bank being the oldest, we've always had as part of our DNA, profitability and economic growth and development. What does that mean? When we put our business strategy together, we're not just pursuing profitability for the sake of pursuing profitability. We've always seen ourselves as an agent of development, agent of economic growth, and we always want to focus on things that assist the country in alleviating poverty. And that's where the significance of working on this financial inclusion emanates from.
So we're staying with financial inclusion. What is the role of financial inclusion in achieving the Sustainable Development Goals?
Financial inclusion is actually central to addressing and meeting the Sustainable Development Goals. And I will tell you why. At the heart of the Sustainable Development Goal is poverty alleviation, is about eradicating hunger, is about wellness and having gender equality. So without a financially empowered individual, without a financially empowered population, meeting the Sustainable Development Goals becomes a mirage. And that's why for us, we focus a lot of attention on helping the government, assisting the government to push the financial inclusion agenda, because we believe is directly correlated to being able to address a number of objectives under the Sustainable Development Goals.
Do you see the introduction of payment service banks as a threat to traditional banks like yours?
The way I would prefer to answer that question is to describe what it is that we've done today in the area of digital banking. Today, without any iota of doubt, our bank, First Bank, we are the leading bank when it comes to digital banking. Today, on the popular USSD platform, as is star 894 hash, we have the largest customer base. 8.2 million customers transact every day on our USSD platform, and we're the clear leader in that space. On the mobile banking platform, we have the second largest platform there. Currently, we have over 3.5 million people actively transacting on our first mobile banking platform. What we've achieved in the last 4 years, we have successfully migrated a chunk of our customer away from in-branch banking. We have migrated them to alternative channels. Today, over 85% of our customer-induced transactions are conducted in channels, and that is quite significant. In fact, globally, when you get to that kind of level of customer performing transaction on alternative channels, you are actually regarded as a bank that has fully moved into the digital age. And that is what we successfully achieved with First Bank. Even though you call it a traditional bank, it's actually a very modern bank. And for us, we are not going to be resting on our horse. We will continue that digitization agenda, and we are here to continue to delight our customer.
Tell us about First Bank's long-term plan.
Coincidentally, this year marks the commencement of our new strategic cycle. And one of the things we've done is that we've refreshed our vision. So our new vision is to be Africa's bank of first choice, which means we're taking not only are we focusing on our Nigerian business, we are going to pay a lot of attention on our African footprints. Again, I tie that to what I said earlier on about the Nigerian government, the president signing off on the African Continental Free Trade Agreement. We believe there's ample opportunity to play across the continent, and that's where you're going to see First Bank. So if you ask me, why do I see First Bank in another 5 to 10 years? We will become a truly African bank. We are in 6 countries. We do have ambition to have additional footprints, which for obvious reason I'm not allowed to say, but be rest assured that, to go back to your question, over this decade, you are going to see a stronger African footprint from our bank.
What would describe you as being quite successful? Now, if you were to talk to the younger generation, what advice would you give to them?
This is an area that is of interest to me, actually. I would say you must have a clear vision of what you want to be, who you want to be. So vision is very important. You must be prepared to work hard. You must be prepared to work smart. when you've chosen to be a professional, you must cultivate a habit of continuous learning. So that learning continuously is extremely important in this space and in most other professional spaces, actually. Indeed, the way I used to tell people is that because we operate in a very, very volatile environment and things are evolving very rapidly, the knowledge and the solutions that were relevant yesterday may not be relevant today. So for me, it's about the vision, it's about working hard and working smart, it's about continuous development, it's about being truthful to yourself and knowing who you are, what you want to do, and where you want to be.
For speaking with us.
Thank you so much.
Dr. Adesola Adeduntan, First Bank CEO, exclusive interview with Channels Television. We'll be right back in 2 minutes, everyone. Stand by.